And as we look ahead to the rest of the week, another huge piece of economic data, the January jobs report. It comes after ADP's private payroll data shows switching jobs is not paying off in the way it used to, and pay benefits from the Great Resignation are becoming a thing of the past. Our Josh Schafer has been looking at that data in the ADP report. So interesting
Normalization,
takeaways.
Julie, I think is our word here. And I think that's going to keep being our word for the labor market as a whole when we talk about, are we softening? Are we cooling? Is the labor market coming into a downturn as we have these rates high for this long? I think it's important to point out right now, economists and to some extent Federal Reserve Chair Jerome Powell today talking about the labor market, really talking more about we're coming back to normal, to where we were pre-pandemic. And I think that's something you see from ADP's chart that was out today when you take a look at wage growth for job changers and job stayers. Your purple line there is people that leave their job for a new job, and your blue line is just for wage growth at someone that stays in their job. You can see that big spread that we had there in 2022 when we were getting a lot of crazy incentives for people to leave their job. And it felt like people that were leaving a job were instantly getting another job. And there were countless stories about things like that. Now we're back to the percentage point spread that we're seeing between those two lines is 1.9%. And that is a pre-pandemic level. So we're back to sort of course, I think a lot of people know when you leave your job, you often do get a little bit more of a pay raise than you'd probably see in your current job, but not anything atypical. And I think that's probably sort of a welcome sign for the Fed in terms of wage growth and potential inflation implications.
Yeah, you were talking in a piece too about how that decrease in wage growth, just speaking of the Fed, I mean, that's welcome news to Jay Powell and his gang.
It definitely is. And the other wage growth data that we had out today was the employment cost index, right? And we saw that quarter over quarter increasing less than 1%. That was the first time ECI has increased less than 1% on a quarterly basis for nearly 2.5 years. So that is an ideal scenario for the Fed because, of course, the take being if we were to keep making all this money and perhaps maybe making too much money, we might be willing to pay higher prices. So it seems like for now, that's sort of coming into favor for the Fed and falling in the right direction.
Only there were a way for us all to make more money and not pay higher prices.
That's the ideal, right? That's the real soft landing, Julie. That's
really
the ideal
is.
scenario for us.
All right, Josh Schafer, thanks so much.